The entire world had a problem of monetary expansion. There are a lot of non-technology solutions to monetary expansion. All these things make sense until humanity invents something or engineers something better. This is the best year I can remember in my lifetime. I think what's driving the Bitcoin market is institutions. And institutions are bringing billions and billions of dollars to Bitcoin because they want to store a value against monetary inflation. Everybody's buying this Bitcoin on regulated exchanges. They're storing it with regulated custodians, and they're doing it subject to AML KYC regulations that have been in place for a long, long time. There's not anybody that's buying Bitcoin right now that isn't expecting to do it on a regulated exchange subject to normal regulations. And the fact that AML KYC regulations apply to bonds, Apple stock, Tesla stock, and other types of assets hasn't kept them from having value. So I think the summary here is we're going to find conventional AML KYC regulations applied in Europe and the United States. And everyone that's buying Bitcoin and holding Bitcoin as a monetary inflation hedge is going to find that to be acceptable. And this is much ado about nothing. The entire world had a problem of monetary expansion. If you're an engineer, you look for a technology solution to a problem. There are a lot of non-technology solutions to monetary expansion. I mean, gold is a 5,000-year-old non-technology solution. And now Bitcoin is the technology solution. I had 10 years of experience. I could look back on what all the Bitcoiners have done for a decade. And I just had to make a guess, which is the rest of the world going to be rational and look for a technology solution to their problem? And I don't think it's an irrational thing to bet on technology in the modern era. So that's what Bitcoin is, great monetary technology. If I wanted to take $1 billion of Tesla stock and wire it to a private wallet in sub-Saharan Africa, my bank wouldn't let me. That doesn't keep me from buying Tesla stock, right? If I wanted to take $100 million worth of farmland in the middle of the United States and wire it to a private wallet somewhere in Asia, that doesn't, the government wouldn't let me. I can't physically do it. It doesn't keep me from buying farmland as an inflation hedge. People are going to buy Bitcoin because it is great property in cyberspace as a monetary inflation hedge. If you actually put regulations on it that are anti-money laundering regulations, or you put regulations that have to do with know your customer to prevent using it to finance any illicit activity, it's not going to undermine its value as property because it's the most pristine, highest quality property in the 21st century. People are going to buy it. There are going to be regulations that'll vary from country to country, and I think it'll be just fine. I think that gold served as a store of value because it was hard to produce, and every wealthy person on the planet agreed that gold was the principal fundamental money, right? The gold standard, if you will. 5,000 years of the gold standard, it makes sense. All these things make sense until humanity invents something or engineers something better. Horses, wooden ships, swords, bows and arrows, brick walls, roads, they all made sense until we had airplanes and electricity and modern technology and telephones and the like. So, Bitcoin is, you could think of it as a social network combined with money. If everybody on the planet agreed to put their money on a digital network, the Bitcoin network, and sell their gold, you would have something which had all the benefits of gold, none of the liabilities of gold. That's what's happening right now, right? That's why Bitcoin is up 300% in the last 12 months and gold is up 15%, right? If you wanted a year when gold should have performed, a year of political instability combined with monetary expansion, this is the best year I can remember in my lifetime. When, maybe back in the 70s you had something, but in the last 20 or 30 years, this is a year when gold should have performed, but it didn't. And the reason why it didn't is because Bitcoin is digital gold. And when somebody comes along with something better than the 5,000-year-old non-technology or old technology, it replaces it. Now, why is Bitcoin better property? Because it's pure monetary property in cyberspace. It has no weight, therefore I can move it at the speed of light. It has no jurisdiction. Gold has to go into a vault in Manhattan or in London, and some bank, some counterparty, and some government has some control. I can't move $1 billion of gold with my head in a few seconds from one side of the planet to the other side of the planet. And so as long as you have mass and locale, the property is going to potentially be impaired. If you had $100 million and you bought land in California, the governor of California has some power over the value of the land. The government can impair the asset. If you take $100 million and you put it in gold and put it in a vault in a bank, they can impair the asset. The government, the governor, the mayor can impair the asset. The laws of physics can impair the asset. I can't wiggle my nose and move the gold 1,000,000 times in a split second. The laws of physics control me. With Bitcoin, the government can't impair the asset so easily. The laws of physics don't impair the asset, and software engineering enhances the asset. So if I'm looking for a way to pass monetary energy, money, 30 years in the future, I have to figure out how it's not going to be impaired. And of course, that just means I want the least number of moving parts.